Hello there, Mavericks. This is Rob Reinhold. It is October 10th, 2024. Let's get into what happened today. In this session, we're going to go over the news of the day. We had some big economic news this morning that we'll talk about, and I've got 3 trades for you, 1 bull, 1 bear, and 1 sideways.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, by the end of the day, it was actually a pretty quiet day with the Dow down a little bit, the S&P down 0.2, the NASDAQ down just slightly. The Russell at one point was down about 1.2%, and it crawled its way back to only being down 0.5%. Oil and gold virtually flat for the day. And if we take a look at the news of the day, it was all about the CPI. Now, the CPI report came out hot. The expectations were for a headline number of 0.1 increase and a core of 0.2. As you can see here, it was a little bit hotter than that 0.2% on the core on the headline number and 0.3% on the core number. Now, I talked about this number on Tuesday, and I said, even if it's hot, I don't think it's going to slow the market down. Now, look, we did open down today. We did open down, and the markets did recover by the end of the day, but still negative. So I don't want to say that there was no reaction to the market, but definitely a blunted reaction to a hot inflation report. And on top of that, we actually got a jobless claims number. We get jobless claims every Thursday. That was much higher than expected. Expectations were for around 220,000. This was around 260,000. Now think about this. This is kind of like worst case scenario. The market is all of a sudden now saying the Fed's not going to cut as aggressive. But jobless claims leapt this week, meaning a lot of people got laid off. So all of a sudden, this is like worst case scenario. High inflation with weak economic growth. There's a word for that called stagflation. It's not a good thing. Now look, the market is not too worried about it at the moment. This was just one report. All the other numbers, just like the other jobless or the jobs numbers we got last week, were super strong. So again, the market has pretty much shrugged these off. Here is the candle for the day. And I got to say, there's not much that this candle is telling us. We had a nice expanded range candle here. We gapped down, and basically we traded in the upper half of yesterday's candle. Look, there's just not much this is telling us at this point. This is just a candle. Sometimes you get candles that are meaningful, and sometimes you get candles that aren't meaningful at all. This is just one of those candles. It doesn't mean anything. We just made a new all-time high yesterday, so you definitely can't look at this candle and say, oh, that was it. We're definitely still in an uptrend, but I want to see tomorrow's candle. The candle on the NASDAQ was actually a little bit better, a gap down, and we got some buying. And at one point, we were higher than the previous day's high, also hitting up against this resistance. Everything is still pointing up to me, but today's candle was just, there's not much to talk about, so I'm not going to spend a lot of time talking about something that it's just not there. We take a look at the heat map. We've got up and down all over the place. Energy continues to be green. Now remember, oil took a little pause today. It's a very bullish sign that when oil goes down and the energy stocks still go up, it's telling you, hey, they really want to go up. So on the days that oil's up, they're up big. The days that oil is down, they're up a little. Very bullish sign here for that sector. Nothing has changed. We're at a +3. So that means that we're still wanting to be net bullish. I've got some trades here for you. You can take a look through these lists. Some of them have been on the list for a couple days, and some of them are new. But this is the one I want to talk about. This is Peabody Energy. This is a coal company. And yes, there are still coal companies out there, if you can believe it. Just a really nice high base pattern here. Huge run from 20 up to 26, 20% run. We had about a 2.5 week of consolidation, and you can see we closed right at the top. They were buying it at the close. If the market would have stayed open, this candle would have been bigger with the supply and demand imbalance. I like this one up to the 28, but you don't have to play it that aggressive. You could easily play a 26-27 bull call spread. That's going to cost you probably about 60 cents. So you have 60 cents of risk, 40 cents of upside. This is going to be a positive theta trade. You could do a targeted butterfly, 26, 27, 28. But I like this one to the long side. So I'm looking to do the 26, 28. 26, 28 vertical spread going out 2 weeks on this one. Right, next up on the sideways is Borg Warner, BWA. This is in the automotive section in consumer. And you can see the range here is 31 up to 37. But I really want to focus on, over the last couple months, we've been more in the upper end of this range. So I'm really looking at this thing from 32 to 35 to 37 or 38. And that's going to be my butterfly that I open up. So I'm looking to open up a butterfly, probably a $3 on the legs. So a 32, 35, 38. I don't think it's going to break out to the upside, but it could. You can always move strike prices up. If you say, Rob, I want to do the 34, 36, 38. I want to be in this area on my butterfly, make it a little bit more bullish. Knock yourself out. I think that's a good call as well. And then on the downside, I've got Rivian. This stock has completely ignored the bull market. And you can see base, fall, base, fall. Here we are, base, maybe even a little bit of a bear rally. These are substantial moves. So 960 up to 1090. That's probably about a 15% little rally there from the low to the top. Nice candle here saying, okay, we had 3 days of buying. We had one reversal candle, and now we have a day of selling. This thing looks like it's going lower. $9 is the target. Give yourself a little bit of time on this one because that is asking this stock to basically drop about 12%. It should take a little while without any news on the horizon. So you can take a look at the 9-10. Give yourself about 3 weeks on this. If you want to go a little bit shorter, you could always do a 10-11. 10-11, that's going to be, again, you're going to get about, again, pay about 60 cents. That's going to, again, a bear put spread. You're going to pay about 60 cents. You're going to get 40 cents of upside potential. And if it just has to go below 10, and that's going to be profit on this one. Let's talk about tomorrow. We have bank earnings starting. So third quarter earnings officially begin tomorrow. We've got JP Morgan, we got Wells Fargo, we got BlackRock, we got Bank of New York, and some others. So it really starts off very heavy in the financials. Next week, we're going to start to get into the other companies, but it's all going to be about the financials tomorrow. We do have the PPI report. I don't think that's going to be as important as the CPI, but look, if the PPI comes out hot again, it might make the market a little bit more worried, which means that we probably won't get a new high tomorrow. If this number comes in as expected or better than expected, I think that's going to give people a reason to forget about this CPI report and push the market even higher. Ultimately, I think tomorrow is not going to be a very crazy day. I could see up 0.5%, down 0.5%, and that's about all we have here. Because I do think the velocity is slowing down a little bit in the market. That is the Market Roundup. Thanks for joining me. Goodbye, everyone.